brand. And before joining Citibank in the U.S., Mauricio served as Citibanax's head of commercial banking for its central region. And Mauricio has 24 years of banking experience. And today, Mauricio is responsible for the segment that includes local and international companies with annual revenues between 100 million and $1 billion. Mauricio leads the Southwest region in the United States, and the Southwest region includes Southern California, where we, as the United States-Mexico Chamber of Commerce, function, Arizona, Nevada, New Mexico, and Utah. Mauricio holds his BS in Business Administration from the Universidad Iberoamerica in Mexico City, and he has an MBA from the Anderson School of Business here in Los Angeles at UCLA. You know, go UCLA. And with that, Mauricio, I'll hand over the process to you.
Thank you so much, Mark. Hope everyone hears me okay, and thank you for the kind introduction. Welcome to the friends and members of the U.S.-Mexico Chamber of Commerce. And to get started, I would like to go ahead and introduce our first speaker, my dear friend, Sergio Luna. Sergio is actually Citibank chief economist. He has, ample experience as a professional economist, 31 years. And he's the director also of the Department of Economic Research for Citibank. Sergio holds an economics graduate degree from Universidad Nacional Autónoma de México, and he has his PhD doctorate in economics from the University of London. So we're really proud and happy that Sergio is our first speaker. And without further ado, I'll hand it over to Sergio. I'm sure he'll talk about many interesting things happening right now in Mexico and its economy. So thank you so much, Sergio. Hand it over to you.
Thank you, Mauricio. On the contrary, and I was just watching the picture of myself there in the screen, and you can see now what is the effect of having, been in your own place for a couple of months. It's very different, the look that I have right now. But anyway, I guess that we are all in the same situation. I'm really glad of having an opportunity to say hi to all our friends both sides of the border. This is an association, the U.S.-Mexico Chamber of Commerce, that I'm very close to. So I'm really glad of being this afternoon with you all. There's a lot of material to cover, of course, but I will probably try to go through it relatively quickly in order to have as much time as possible for your questions, which is obviously the most interesting part of the presentation. So without further ado, if we look at the first chart, this is just to give you some bit of background of what we're expecting with our colleagues of Citi around the world in terms of the global economy. I think that it has been said, ad nauseum, that we are living probably the worst recession in terms of economic activity in living memory. Just to give you some idea, you can see that now we're forecasting that the global economy is going to contract 3.1% this year. Just to give you some idea, the end of last year, we were actually projecting a positive rate of growth of 1.3%. So a swing of more than 4 percentage points in our estimate of the global rate of growth is equivalent to wiping out around $7 trillion in terms of value. That gives you the dimension of the recession. So this is essentially and foremost an economic recession. Activity is plummeting. And there was a lot of discussion among economists on whether this sudden stop in the global economy would lead to more impacts coming from the demand side or the supply side. This is important for us economists because depending on whether the effect that dominates is on the demand or in the supply side, you are going to have effects over inflation or not. And what we can say is that up to now, the dominant feature of this massive recession is demand side effects. Demand has been essentially disappearing when you think about services. This is a major shock on demand. And this is relevant because it implies that this is a recessionary recession with disinflationary forces. And obviously, the most spectacular example of that is the oil market, where, as you can see, There has been this, unusual drop that we saw in prices in the second quarter, which is essentially explained because in spite of an OPEC Plus agreement of cutting production in 10 million barrels per day, actually demand dropped by 30 million barrels per day. So that gives you some idea of how strong has been the effect of demand. And obviously, as a result of that, we are going to have pressures downward on prices. And this is important as well because it implies that central banks can therefore act aggressively in terms of cutting rates, which is something that we have seen all over the world as well. I'm saying there that Mexico's action in the OPEC meeting that became a bit famous by our representatives and the way they behaved there in terms of trying to negotiate a smaller cut. Actually, and this is something important for all of you entrepreneurs, Mexico is not an oil economy, not anymore. The weight of the oil industry in GDP in Mexico is less than 4%. Just to give you some idea, the weight of the same activity in the US is 8%. And we have a trade deficit on the oil products rather than a trade surplus. So essentially, we were trying to negotiate and trying to get closer to a sector that has a lot of troubles when we should be trying to take advantage of this opportunity to distance ourselves from the oil market and actually to try to import more energy items into Mexico that would make the real, backbone of Mexico's economic activity, which is industrial activity, much more competitive. But this is just a note on the margin. Let me move just to provide a bit another element that is important in terms of the global background for understanding what's going on in Mexico. We can go to the next chart. We are essentially looking here at the features that we expect to see in terms of how we are going to be getting out of this current stage. We can discuss for hours about it. The truth is that this is going to be a discovered country for many of us. Something that is also important in terms of the features that we have is that this is a recession that is disinflationary. And the other thing that I will emphasize on this chart, and with that I will probably jump into Mexico, is that on the fiscal front, we're moving from a view in which countries were trying to keep strict control of fiscal, trying to run a tight fiscal policy, which was known in Latin America as the Washington Consensus. You have to get your fiscal situation in order and run balanced budgets. Consensus. Consensus is that given this sudden in terms of perspective by the private sector, the only way in which you can avoid that leading to a more permanent damage on the global economy is by stepping up into the fiscal fuel and leading to major fiscal stimulus. We think that in general, and this is for the worldwide situation, obviously for each country the situation is different, but at the global level, the drop in activity will require a stimulus of around 5% of global GDP in order to compensate for the gap we are seeing in terms of this deterioration of private spending. So from that point of view, several of the actions we have seen around the world in terms of very aggressive fiscal policy is another important feature of the current situation. So essentially, we have a major drop in activity, few pressures in terms of inflation, allowing central banks to act very aggressively, and also fiscal, since rates are lower, allows that the fiscal response has also been very aggressive. The situation, nonetheless, is very different in Mexico. Let me move to the next chart, please. We are looking here at the first and sort of the initial impact on Mexico and in other emerging markets, and the initial impact was on the financial variables. And this is sort of normal when we didn't know what was the magnitude of the crisis. What we saw originally was a major event of risk off. You can see that, for instance, when you think about exchange rate, we saw a major movement of exchange rates for emerging markets, getting massive depreciation of currencies across the world. You can see that the behavior of Mexico, of the Mexican peso, was pretty similar to what we saw in the rest of the world. And probably what you see there as well in terms of the lower part of the chart of outflows of money invested in emerging markets, again, something similar in the sense that you were seeing sort of a normal situation until the fourth quarter of last year, and suddenly a major outflow of resources coming out from emerging markets. The same situation in Mexico. Now, something that is interesting there is that when you look at both exchange rate as well as to financial flows into emerging markets, the second quarter is apparently already reversing a little bit of the situation. After massive outflows in the first quarter, during the period of major uncertainty, led to a bit of a rebalancing in the second quarter so far. Nevertheless, when you look into the case of Mexico, we have seen that in that regard, Mexico has been underperforming. We haven't seen a reversal of the situation in the first quarter, as we see in general in emerging markets, but essentially that people are getting a bit more bearish Mexico, if you will, in terms of international capital markets. And I think that there are reasons for this based on what we are seeing in terms of the particular performance of Mexico during the coronavirus stage. In order to track these results, we devised sort of a scorecard, which is in the next chart, in which essentially what we did, and I said, Marlene, a piece in which we elaborate a bit more on these indicators. If we can go to the next chart, please. But essentially what we are doing here is looking, if you look, lower left-hand side grid, we are looking at two variables. One has to do with sanitary outcomes, which is the number of cases of coronavirus in Mexico. And on the horizontal axis, we looked at the severity of the recession. This is because there is a lot of debate on whether there is a trade-off between privileging sanitary results over economic results and vice versa. We don't think that this is a debate. We think that essentially you need to do what you need to do in terms of sanitary policy, in terms of non-pharmaceutical interventions to try to control the outbreak. And on the economic front, you have to complement that with economic policy measures that sort of mitigate the impact of strict lockdowns over economic activity. And this is some of the variables that we're using to measure the situation in the combined outcomes areas, in which you can see that although in the sanitary case, we're not necessarily yet on the red area, we're already seeing a very severe economic impact where we're already indeed on the red area. Just on the sanitary front, and this is the detail we have on the lower left-hand side chart, you can see that the pace at which we are seeing the evolution of the pandemic in Mexico is not very different from that has been taking place in other countries in the similar stage of development of the crisis of the sanitary crisis. That's a reason why we have indicators either in green or in yellow. What is our main concern, and it is highlighted in red, is that we are doing very little testing in Mexico. We're actually doing, what the level of testing that we are having in Mexico is one of the lowest worldwide. This, in principle, shouldn't have any impact in terms of the actual trajectory. That means that probably the number of cases is the actual number of cases, and you probably have seen several articles in newspapers in recent days, claiming that, that the official tracking of cases in Mexico has been underestimating the actual number of cases. That is true. That is the case, given this very low level of testing. Obviously, the actual universe of cases is much bigger. We think that probably is 5 times what the government is reporting. As long as you are consistent in terms of that measure, however, you should probably track the trajectory relatively well. The only problem is that you have a lot of uncertainty about the actual measure. And this is precisely the stage in which we currently are in Mexico. We are probably at the height of the pandemic. The government is claiming that already sort of the curve starts to flatten. That's hard to say because, as I said, with very little testing, it is actually a lot of uncertainty. And we think that we're going to be on this level of uncertainty for a couple of weeks at least before we can actually know whether this is indeed the peak or not. So from that point of view, I think that the main risk that we are having in Mexico is that the exit period from the sanitary emergency is going to be gradual. And it's going to be probably with a lot of uncertainty, more uncertainty than we are seeing elsewhere. The problems are the same that in the rest of the world. I think that the main distinctive feature of Mexico is that we are doing very little testing. And this is quite important when you want to, to sort of secure people that it is safe to start to go for a normalization. Nonetheless, you can already see on the right-hand side the impact on several variables. In the study I sent, Marlene, we have way more indicators. These are high frequency, what we call daily figures in terms of gasoline consumption, our own figures in terms of banking activity, hotel occupancy. You can see that the impact has been already very, very strong in terms of activity. And that's the reason why we think that we are going to have a very severe, recession in Mexico, which is what we are illustrating on the next chart. Just to give you the numbers, if we can jump to the next chart, please. Just to to compare with what we were having. Thank you. With our global comparison, we move, as I said, from around 1.3 to minus 3.1. In the case of Mexico, we were expecting 2020 to post a GDP growth rate of 1% at the end of last year. Now we are thinking that the economy is going to contract 9%. This is going to be the largest contraction in recorded history of Mexico, at least since 1932. And the peak of that contraction is going to take place actually in this quarter, as you can see on the chart on the left-hand side. We're projecting the economy to contract 17% on an annual basis. This is going to be the peak, and as you can see, given the severity of the recession that we are projecting, we are going to be seeing the overall, quarterly figures showing negative figures until 2021. So clearly, this is going to be a crisis of activity. But it is very important to make a distinction about what is going to be the impact of that crisis. It is a crisis on activity, but at the outset, what I can tell you is that fortunately, it's not a macroeconomic crisis, or at least it is not until now. First of all, you can see on the right-hand side that inflation, as it is happening in the rest of the world, is declining. Inflation in Mexico is currently 2%. We expect that it will increase a bit because essentially the depreciation of the peso that we saw in the first quarter is going to have some impact into local prices, but the contraction of demand is going to be so strong that it will sort of mitigate all the inflationary risk. And from that point of view, we think that we are going to end with inflation at around 3%. So there is not a comparison with the balance of payment crisis that this country went through in the 80s and 90s, in the sense that you usually used to have a stagflation, a contraction in economic activity and inflation going upwards. This is not the case. Inflation is going to remain low. The other aspect that it is not an external crisis. You can see the current account on the lower right-hand side. Again, we are projecting that as a result of the contraction in economic activity, Mexico's import absorption is going to contract quite substantially. And on the other hand, and this is good news for you guys, the export sector is one of the sectors we expect to start to rebound faster. Several reasons. The approval of USMCA will coincide with a renewed conflict between the US and China. And, the sort of the natural beneficiary of trade deviation and investment deviation is going to be Mexico. So from that point of view, we're going to have a situation in which imports are going to contract because the internal market is not growing, and exports will start to recover earlier than the rest of the economy, and that will imply that for the year as a whole, we're going to have a current account surplus of around 1.3% of GDP. This is the first time and the largest we are going to have since 1987. What this means is that, if you will, we are not going to be needing financing from the rest of the world. That is one of the reasons why we think that eventually we should see the peso start to appreciate a bit versus the US dollar. It's currently around 24 pesos per dollar. We think that by the end of the year, we're going to be closer to probably 23. It's not going to be a major appreciation of the peso. And essentially, that will have to do with other factors I will mention in a second. But from the point of view of external accounts, the situation is going to be, fortunately, one in which we're not going to have a demand, an excessive demand for hard currency in Mexico given this situation. So, not an economic crisis, not a nominal crisis by inflation. The external sector is going to be fine. If we go to the next chart, please. This is what we are worried about. You're going to have a contraction of 9% of GDP. This is going to be quite substantial. And obviously that is going to have an impact on employment. And the main point of debate right now is that the stance of the Mexican government in terms of doing measures, fiscal measures, for instance, in order to try to counteract the impact of this recession has been extremely limited. So from that point of view, if you are going to have a contraction of 9% of GDP, you are going to have a contraction in formal employment. We estimate that with a 9% contraction of GDP, formal employment is going to fall by 1.2 million.
Okay. What kind of a business do you have?
We already know figures out to April this year. They were released yesterday, and we already are with around
music studio
jobs being lost so far.
Probably. Do you have one already? Are you renting a place? Are you just looking to move?
Please mute the phones.
Mark, I'm sorry, Mark Levinson. Yeah, I don't think he can hear us. I'm sorry. I'll send him a message.
Okay, right. So essentially, what I'm worried, and I'm seeing that yes, you are probably shocked by the magnitude of the contraction we're seeing. Yes, it sounds aggressive. The numbers are.
What is your budget range
in terms of the contraction?
Whatever property.
What worries me is that this level of unemployment, is going to jump, and obviously there is going to be an important impact, important shock.
Hello?
From that point of view, the social implications of the crisis are going to be relevant. We can go to the next one, please.
How do I move? Oh, sorry. Thanks.
Thank you. Can we go to the next slide, please? Thank you. So essentially here, what is the kind of policy responses that we're going to be seeing in Mexico? As I said, given the recession, the fact that inflation hasn't been an issue, that is allowing the central bank in Mexico to cut, interest rates more aggressively than it used to. We are actually expecting Banxico to cut another 50 basis points tomorrow, and they have also made several measures, and this is relevant in terms of creating, support in terms of liquidity and credit for the equivalent of 3.3% of GDP. So from that point of view, the action of the Central Bank of Mexico has been similar to what we have seen elsewhere. Given the severity of the recession, the Central Bank has done whatever is real in terms to try to mitigate it. So monetary policy and central bank activity is doing what it can in order to address these problems. We can go to the next one, please. The problem we see is essentially with fiscal policy. You can see on the left-hand side, how the numbers for fiscal are deteriorating as a result of this recession. After the government was estimated to run a 0.7% primary surplus, once we consider all the impacts, we think that they will end up with a deficit of 2.8% of GDP. That is, of course, creating some concerns about their credit rating agencies. We think these concerns are essentially of a different nature than what the government suggests. First of all, we don't think that the government is doing enough, curiously enough. If we can go to the next one. Just to give you some idea of what we are having in mind, we are running that I just showed you. If I will focus on the chart on the lower left-hand side, you can see net public debt in Mexico. As you can see, we're going to have a jump in net public debt, just as elsewhere. But if you look into a scenario, and this is the gray line, in which we're assuming a much more aggressive fiscal stance, that suddenly the government spends around 6% of GDP in supporting the economy and propping up, you end up with a level of debt is lower than in the alternative scenario. And the reason for that is that the denominator counts. That is, the level of public debt can increase, debt to GDP ratio can increase if suddenly the denominator, because of the contraction in economic activity, gets too little. So from that point of view, at this stage, we think it is more important that the government is more aggressive and implements the kind of actions that are necessary to reactivate the economy. I'm going to probably go faster. I have already several questions here. So essentially, we think that this is a problem. The government is not doing enough in terms of fiscal policy to try to mitigate the impact of the recession. In the next chart, you have the problem of Pemex. I will not elaborate pretty much right now. Probably we should leave that for Q&A. I will just tell you that in the first quarter of this year, Pemex lost around 500 billion pesos, which is, essentially what it lost throughout 2019. It posted all these losses in a single quarter in 2020. This is getting very expensive. From that point of view, the bet of the López Obrador administration on the oil industry can be more of an important concern about the fiscal situation than, for instance, redirecting that resources to fight the effects of the pandemic. So I will just leave that for questions if you're interested. Next one, please. So point of view, and this is, I guess, similar in some other cases. What we are seeing as the main problem is that there were several aspects of the policy under an AMLO administration that we didn't like, in the sense of having, a very confrontational stance, this idea of pursuing import substitution in the energy sector, and an austerity at all costs. And these all things haven't changed as a result of the coronavirus. So that is essentially intensifying the challenges that Mexico face. So far, we don't think that AMLO is going to change. This is already having an impact, as you can see on the right side chart, in terms of approval ratings. So from that point of view, we think that this is, also going to have social and political consequences. And probably López Obrador, AMLO, is going to get more confrontational when he faces adversity. And we know that from his story as a politician, he used to be more radical and more confrontational when he faces difficult circumstances, and these are indeed difficult circumstances. Whether this is leading to eventually, a change of stance or not, I think that will depend on what we see, how the crisis evolves in the next few months. For the moment being, what we are thinking is that the external sector of Mexico is the one that is going to be performing better. I think that from that point of view, and that has to do with one of the questions I have on the chat, I think that one of the checks and balances that have proved effective for López Obrador is the relationship with the U.S., fortunately, and from that point of view, efforts to coordinate, the opening of North America in a similar fashion in order to consider a logic of integrated change is one of the things we do expect to happen. López Obrador can prove a very, I would say, ideological in some areas. To the U.S. relationship, that is quite important for him, and from that point of view, this is one of the sectors in which we think that we are going to see probably the main developments. Otherwise, we are going to probably have, a very confrontational next few months. The last chart is just a summary of the figures I described. If we can just go to that, and probably from that I will just go into Q&A because I'm taking more time of what I thought. So if we can just jump to the last, yeah, there you go. Sorry, the last, we don't have the last headline, is 2021. But those are the figures of our forecast.
Thank you, Sergio, for that very interesting and I think a bit concerning analysis on Mexico, but very real, right? So thank you very much for that. Very interesting. We'll move over to the next speaker, and then at the end we'll leave room for questions and answers. So if you wouldn't mind staying a bit more, Sergio, for the webinar, so you could perhaps answer some of the questions from our audience. So going to our next speaker, I'm glad to welcome Luis Hernandez. Luis, of course, is the president of Index, which is the Mexicali Maquiladora Association since 2016. He's also the CFO of Yacuza de Mexico. Luis has ample experience in doing finance and business in Baja California and across the border. He's a public accountant from Universidad Autónoma de Baja California. He has an MBA from Tec de Monterrey and a PhD in business from Atlantic University. So again, thank you, Luis, very much, and hand it over to you.
Okay, thank you very much. Can you hear me well there? Yep. Okay, so, well, thank you for the invitation. I'll try to give a summary of what the manufacturing industry is in Mexico, what we're doing and what we're seeing. I think with the information we just revised. Can you hear me there? Good, sounds good, okay. So we'll share a profile of the industry and what are the challenges that we're seeing right now with the COVID situation. Okay, just in a nutshell, what is the footprint that we have in Mexico? We have 6,350 maquiladoras, as we say, or IMEX companies in Mexico. That is only a 0.3% of all the businesses we have across Mexico. It's a small portion of the maquiladoras through Mexico. However, that represents 53% of Mexico total export. Okay, that is a key number and a key element that we need to tie back to the economic outlook that we were seeing a few minutes ago. Because if we have a hit on the sector, there's a hit in the whole Mexico as a country. Okay, there are 3.2 million people working directly for this sector, and it seems that there's around 6 million additional people working indirectly as a service supplier. So we're talking about almost 10 million people which are dependent on this sector. Okay. Something very important as well is the average literacy that we have in this sector is high school, in middle school, high school. That is a sector that has been growing, and as we speak, the requirements and the qualification keep getting higher and higher because we're not competing in Mexico. We're competing against other countries. Okay, and then the final topic here, maquiladoras. Maquiladoras are 10.3 times more than oil exports, which is a huge, massive number. 9.9 millions, times more than tourism, and almost 8 times more than the remittances that we're getting from the US into Mexico. So these 6,000 companies, these 3.2 million people reflect a huge economical factor of Mexico. If we go to the next one, we have 2 challenges. The first one is that Mexico is at the first week of May, based on some McKinsey analysis there, has the largest and fastest rate of contagion of the COVID-19 with 8% compared to a 4% in Latin America, which is massive for us, which is critical to us as well. Then there are no federal grants, there are no benefits or tax considerations, and that is something that we like to say, but we expected that. We didn't expect anything from the federal government. But that is taking a toll and will be taking a toll in the future of the investment for Mexico. Okay? If we go to this graph on the stages per McKinsey, there are 4 stages that we'll be seeing. Okay, these are the months that we foresee that will be occurring. So the preparedness for the crisis started back in February. Okay, right now we're navigating the crisis, as McKinsey says. This part here, it is the health portion. This part below here, where you see the 25%, that is the economic effect. So what we're seeing in Maquiladora Industry is that at least we'll be losing a quarter of sales, meaning that we started shutting down operations in March, mid-February. So we have March full month, April full month, and mid-May. So we're talking of almost 3 months that we'll be shutting down operations, and that will take a toll in employment, economy, distribution, and several other topics that I'll cover in the next minutes. So what we're seeing right now is that when we start coming out of the crisis, it'll be just trying to get some jobs out there, but it will be end of June. But we believe that maybe at the end of November, or early December, we'll see things getting better and better because of the COVID situation. To your right, you will have the operations in Mexico. So for the first week of April, what you see in green, that is the number of maquiladoras that were open. What you see in yellow, the ones that were closed, okay? So more than 58% of the maquiladoras were closed in the third week of April. So what happens there is when you have 58% of the industry closed, the people didn't stay home. People got out of their houses. They were out, they were buying stuff because we were paying them. So that will create an impact this month again on this COVID situation. Right now, we're already started opening operations. You saw the news today as well. We're seeing like almost 60% of the operations will be working in the first week of May. So we have three main topics here: is limited top growth, the top line, the cash outflow. That is critical for us. We're paying inventories, we're bringing stuff from China, and then there is a new market strategy. Why is that? Because right now the consumer will save some money and they will wait until this happens or this ends to see what happens with the consumption. This is just one day in Baja California with a maquiladora. Okay, we generate 1.2 million people employment, 830,000 indirect services, transportation, consulting, 373,000 people working directly for the maquila industry. That means that every single day in Baja California, there is a payment of $90 million. If we go to the lowest level of salary, we multiply that times the people that we employ, we're paying $19 million altogether. Okay? And then tax-wise, Social Security, income taxes, and state taxes, we're talking about almost $12 million. So every single day, $21 million are flowing into the maquiladoras in Baja California. As well, every single job that we have in Mexico working for this industry will create, every 2 jobs will create a job in the US, okay? Mostly on the border towns. We'll see the many of transportation industries, brokers, service providers will get a part or a portion of these $90 million. So we're talking about that these $1.2 million are creating 70,000 works in the US. Last 2 slides. The employment that we see at risk is we'll be losing between 4% and 11% of the employments that we have right now. So we're talking about 20,000 people to 45,000 people that might get out of the jobs because of the market. Supply chain will change. I'll cover that in a minute. That will change a lot because right now we understood that maybe it's cheaper to buy in China. However, the time and the response that we're getting is very, very low. Space in manufacturing will shift into effective space. Okay, right now, between this year and the following year, what we're expecting is to have a larger facilities, maybe, or reduce the people working at the facilities. It is either or. Why is that? Because we need to keep distance. We need to make sure that we're following all the health requirements that we're getting from the federal government, state governments. Cash, that will be something that we'll cover in a few minutes. But right now, we're paying inventories, we're paying suppliers, and there's no top line right now coming in. And then the customer experience will shift. Right now, we're seeing that customers, let's say for a television, do you really need it? Do you really want it? So that will come kind of it'll be a daunting situation there. What are maquiladoras expecting after COVID-19? Globalization, the first one to regionalization. Okay, there are many risks that we're seeing, geopolitics, customs, trade changes. As you have seen, the trade war with China is one of those. We'll be seeing that more and more. So we need to take good advantage of the new TEMEC or the NAFTA upgraded, as some people refer to it. Number 2, the speed of resources and scaling. How fast can we react to get resources in the operation or out of the operations? And then can I add more or be flexible to my new project? The scaling process will be critical for us. Number three, how we work and how we consume. A lot of the jobs will become redundant, okay? Companies have noticed that many people can work from home, maybe partial hours. That will change how the maquiladoras react, how the maquiladoras work as well. And then the consumption, as I said before, will be based on do we really need it or do I really want it, okay? Finally, the social development, how the state will protect our people, will define the safety and the health situation of every country. So we need to get closer to the user. We need to get faster to innovation and get stronger with the current resources that we have. Limited resources that we have right now, we will not get any additional of those. Finally, this is just a nutshell of what we're trying to do with Index and the maquiladoras in Baja California. We're trying to support the hospitals that we have. As you have seen, the spread of the virus is very high in Baja California. So some of the companies, some of the people have helped us here. Tecma has been a good player, Kyocera, Hunter, Jacuzzi. What they will do is they will give us either money or payout for the food in the hospitals, or they will give, say, protection or face masks or goggles to some of the doctors. We're getting as well, we're supporting them with stuff, maybe giving them additional benefits to the employees. Should I give you a life insurance? Should I give you something else? So what we're trying to do right now is get ahead of the game here and just be prepared for the next normal that we're talking right now. That is all from my side. I don't know if any question you will have at the end, I can certainly help you there. Marlene, participation, thank you.
Thank you very much.
Thank you very much.
Luis. Thank you very much, Sergio. So, Mauricio, I'll let you go ahead with some questions, and I know we had some other comments from another guest.
No, just wanted to thank Sergio and Luis, and very interesting analysis on both of their parts and the presentations. I think we could move over to questions and answer session, Marlene, if that's okay. I think you will be receiving them, right? So.
Yes. Yes. Do you want to introduce Ernesto, perhaps, and then we can continue with some of the questions?
Sure. So we also wanted to ask Ernesto Bravo. Ernesto is a member of the U.S.-Mexico Chamber of Commerce and a very good friend of the chamber. And he runs Tecma Western Division. Tecma is one of the largest shelter service operators in the region of Baja California. So very related to what Luis was just presenting, we also wanted Ernesto to give us his opinion on relating on, how do you think the pandemic could affect also the future of the maquiladora industry? And Luis already gave us a hint of that, but perhaps we could also have your opinion, Ernesto. I'm sure it will be interesting for everyone.
Certainly, we've got to start it off. Thank you very much, Mauricio, Marlene, for allowing me to participate in this great event and great commentary from Sergio and from Luis. We are obviously, as a shelter and administrative services operator in Mexico, we're very much involved with the promotion and the attraction of new investment into the country with regard to manufacturing. And so we're constantly seeing the trends that are going on worldwide and how those impact directly to the manufacturing sector and the foreign investment that's coming into it. This latest crisis, pandemic, is really the latest and probably I think undoubtedly the most significant event that we've had in really a series of events. If we go back just for a minute in history, and we go back to China's entry into the WTO back in 2001, which really triggered a significant move of manufacturing from all over the world, including from Mexico to China. And it really made China one of the top manufacturers in the world for many products. Since then, starting with the late 2000s, early 2010s, we've had a series of events, some smaller and some larger. Certainly this latest pandemic is the largest by far, but a series of events, some related like SARS and the swine flu. Then we had Fukushima back in 2011, Thailand, flooding, and major disasters and major events throughout. And more recently, the escalation of the trade war with China. And so we've gradually been seeing all these factors lead to something Luis was talking about, which is regionalization versus globalization of supply chains and of manufacturing. And companies, really, we've been seeing this on the ground here. Companies approach this Tijuana and companies like us, like Tecma, to look at manufacturing more locally to serve the North American market. And so we've been continuing to see that. I think the Maquila sector, the EMEX sector, is really well placed because of its obvious location, but also because of the diversification that we have, the engineering resources, the cultural affinity that we have with the US, a young population in Mexico. The average age in Mexico right now is about 28, the median age. And so it's a very young population with many young people coming into the labor force, a trend that will continue for another 20 years possibly. So we're seeing that continue, and we have a positive expectation despite all of this and despite what we're going to go through in the next few months, and hopefully we'll get over on the other side of this, where we have good expectations that hopefully look positive for the future. So.
Thank you, Ernesto. Thank you so much. So Marlene, should we move over to the Q&A session for our speakers?
Yes, absolutely. We have a question. I'm not sure whoever wants to jump for this. Saras is asking, like, do you foresee maquiladoras back into production soon? Do you foresee Mexico being more open friendly to welcome new maquiladoras from the United States? That's a question. Maybe Luis or also Sergio, regards to investment as well.
Okay. Sergio, want to go first?
Right. Okay, I can start. Yes, I think that in that regard, as I said, one of the main checks and balances on a government that has been reluctant to change policy in response to essentially the U.S. and the relationship with President Trump. So from that point of view, some of what had already been seen, and today we had some announcements in Mexico in terms of the process of normalization in terms of economic activity. And yes, we think that the sectors that are associated to the external markets are among those who are going to open earlier. Particularly in the announcements that were made today, one important item was the auto sector, which of course is a very important component of the value chains in North America. From that point of view, that is a big sigh of relief because that sector that was already showing some strains in terms of not having enough coordination. So yes, I think that from that point of view, even if the Mexican government has been reluctant and dragging its feet in terms of doing economic measures, I think that those that are associated to the bilateral relation are the ones in which we could see a more proactive stance in several cases brought by the U.S. government. Whether the Mexican government is going to be more friendly, open to maquiladoras in the U.S., yes, as I said, I don't think that is a major issue. The relationship is going to get more complicated because security is going to be a major concern in the post-coronavirus world. It was a major concern, and that is not going to change. And obviously, migration is going to be important as well. That has to do with one of the questions. when you are projecting a loss of 1.2 million formal jobs, part of the impact is going to be on an increase on the open unemployment rate. Another part is going to be reflected, of course, in more informality. And yes, I think that at the margin, we're going to have more migratory pressure. Something that is important, though, and this has to do with what Ernest was mentioning, is that the average age is 28 right now for Mexicans. But when we were at the height of the migrant movement in the early 2000s, the end of the 1990s, we were having an average age of around 22, 23. So from that point of view, the demographic factor is something that, in spite of an increase in migration, is not going to be as aggressive as we saw 10, 20 years ago.
Yeah, on the same side is pretty much, yeah, we're seeing that there were more and more business opportunities based on the regionalization that we spoke a few minutes ago. Situation right now is that with this new NAFTA that we're signing, the USMCA agreement, what we will see is that the trade war will continue. I think Mexico and the US need to be working closely, and as well is right now is for every single dollar that the United States sends into Mexico, they get 25 pesos for it. So that is a good economy as well. So we'll be seeing more of that in the near future.
Very good, very good. Thank you very much. And we also have Marisela Caraballo. She's the Director of International Trade from the Port of Los Angeles. Marisela, may I please have you direct your questions to the speakers? And welcome, Marisela.
Thank you, Marlene, and thank you to the speakers for the great presentation. Luis, I have a follow-up question for you. On the Maquiladora, LA is interested in purchasing directly from the manufacturing companies for our region. So I would love to have a conversation with you if you could talk to us about their capabilities of producing and getting the production of we can make these purchases.
Hey, Marlene, can you repeat me? I didn't catch that at all.
We had a little difficulty hearing Marisela. I don't know if you can get closer to the microphone, or maybe you can write your question because we couldn't really understand very well. Or speak a little bit louder, perhaps.
Okay. Luis, is it better?
Yes.
Okay. So the city of LA is interested in purchasing PPE from the factories in the Maquiladora. So what is the capability to producing PPE?
No, it's very difficult to hear. I'm sorry. Would you be so kind to write down your question, and I will let you. I'll direct it directly to them. Meanwhile, we have another question. Michael is saying many commentators predict a speeding of a supply chain decoupling from with China, with factories being moved out by Japanese, Korean, and Australian. But a lot of to talk to the Southeast Asia from the side to the Pacific. How is Mexico positioned to take advantage of this 2021 in addition to West and North America, despite the distance to market? Any thoughts? And this is a lot of questions that we have. I mean, as a matter of fact, at the Chamber, we get a lot of requests and questions that a lot of people want to manufacture products back to Mexico. So we believe this is a very important moment for Mexico right now to position themselves and to bring the manufacturing for several reasons that we all know. Political, distance, price, quality, et cetera, et cetera. So I'd like to hear from both of you. What are your thoughts on this issue?
Sergio, go ahead.
Well, one thing that is going to be important, and again, that has to do with things that we have seen in the past. In the initial stage of NAFTA in the early 90s, one of the factors that was quite important as well for attracting, firms and investment into Mexico was the fact that the Mexican peso was cheap. And we are back to that situation right now. Obviously, a lot of that was associated to the initial shock coming from the coronavirus crisis. But as you remember from the charts I showed you, we think that from here onwards, the peso is going to appreciate a bit, but it's not going to get back to below 20. It's going to remain in our forecast around 23%, 23 pesos per dollar, sorry. With the fact that, again, at the macro level, when it comes to the fiscal situation, when it comes to the stance of the current administration in several areas, this is not positive in the sense of increasing the productivity of the economy. And unfortunately, when you don't have an increase in productivity overall, and let me stress the overall thing, again, I think that it's going to be important to make a distinction between the export-oriented sector, which we still see very, very, very positively, and the internal market that is going to struggle. I think that from that point of view, the competitive advantage that offers, a cheap exchange rate is going to be important for sectors such as manufacturing. It eventually is going to be important for sectors such as tourism, but that is going to be taken longer to recover because in general, what we are going to see in the COVID-19 post-crisis world is that activities associated to work are going to recover faster than activities associated to play. These are more discretionary and consumers will take longer before they decide to travel. But when it comes to buying merchandise products, we're going to be a bit of a rebound. So I think that exchange rate is going to be an important advantage for Mexico. The other thing that I believe is important is that some of the sectors that are going to prosper in the post-COVID-19 world, such as health articles and the like, are things that are going to be produced at a regional level rather than a global production chains. And from that point of view, some of the activities we have seen in terms of health equipment and the like, in which maquiladoras have already been very effective, are sectors that are probably going to continue to perform very well.
Thank you very much, Sergio. Ernesto, do you have any comments on regards to that? I know we discussed this issue, you and I, previously, and we agree on so many points of view on the timing that Mexico has to take advantage right now on that.
My only comment, I think, would be, and this is based on the experience that we've seen in the past couple of years, I think that companies that are currently have manufacturing in Asia, especially in China, we've seen a higher trend of those companies to move to Mexico if they're headquartered outside of Asia. And this is kind of obvious and makes sense, but we have had significant interest and investigation from companies that are based in Asia and based in China. And we've seen less of a tendency to move operations to Mexico. As the questioner was pointing out, they are also tending to move to other parts in Southeast Asia, Vietnam, Indonesia, even India in some cases. So we are seeing some of that, but we believe that if they are companies that are based in North America or based in Europe and targeting the North American market, we're seeing a very strong probability in that move.
Excellent, thank you very much. And Luis will be back with us just in a quick call, but we have just a quick question from Marisela Caraballo from the Port of LA. She's asking, the City of Los Angeles would like to purchase PPE directly from the manufacturers. Is PPE staying in Mexico or is able to export? If able to export, can you please connect, the City of Los Angeles with those manufacturers that they really need that information? So do you have any comments in regards to that as well?
Yeah, actually, we can do that, Marlene. You can provide her my cell phone or email as well. Yeah, we're yesterday, Monday, we did a large donation to the General Hospital here. There are many companies that are doing that. Many companies are doing gowning as well. Yes, we can certainly help you with that.
Wonderful. Anybody else? Ernesto, Sergio, I know you're more in Mexico and there is more manufacturing here in Tijuana or Baja, but any comments, Ernesto, as well?
Yeah, I think we have some contacts we can share with Marisela, definitely.
Okay, and then there's another question from Andres. He's asking, what is preventing, this is for Sergio Luna, what is preventing Banxico from reducing interest rates or adjusting monetary policy to a more accommodative stance?
Yeah, that is a great question. Banxico has been cutting rates, and as I said, we're expecting them to cut another 50 basis points tomorrow, the rate is going to remain still relatively high. I think that essentially here there is a lot of debate within the board on this, on the pace at which they want to cut rates. The board is now more heterogeneous. It's not your traditional Banxico that used to be a very conservative central bank. Some of the members of the board would like to go faster, whereas some others think that that they will need to go there at a more gradual basis, and that in any case, the terminal rate they can reach should be higher in order to compensate for country risk. It's increasing. I mean, they wouldn't like, these more conservative members of the board, they would like to reach a level of interest rates that once we start to see the fiscal consequences of some of the decisions of the current government, imply that they are probably too low to compensate for higher level of country risk. So this is an ongoing debate. But I think that the overall agreement of Banxico right now, and I tend to agree with them, is that by cutting rates by themselves, you can help to affect, to sort of attack current recession, but it's probably more important to take additional measures in order to guarantee liquidity, to guarantee that credit circuits remain in place. That's the reason why of these measures, of these additional measures to cutting rates, and that is pretty similar to what you have seen in terms of other countries. A crisis of liquidity to suddenly become a crisis of, for instance, going bankrupt. And from that point of view, providing liquidity is probably more effective at this stage of the cycle than cutting rates by themselves. But yeah, rates are high, and that they are essentially high because they have to compensate for higher perception of risk.
Very, very good. There's another question here that today there were some news about Biden indicating that he will be even more aggressive than Trump against the trade with China. And a lot of people, are concerned about that position. What are your thoughts on that? I'd like to ask the three of you. What do you think it will happen with that relationship that has been very hurt in the last, before the COVID event? And that, how can that affect, of course, the relationship with Mexico?
If I could, start, it's up to you.
I'm sorry?
Who starts? Well, I can jump in.
Okay.
Right. I think that essentially, we have to sort of take as a fact that irrespective of who's going to be in the White House next January, this is the U.S.-China relationship is entering into a different stage from the one when China joined the WTO in 2001. So irrespective of whether we have, a Democratic or a Republican in the White House, and I think that was similar since the Obama administration. You started to see that it was already starting to move into a more, I would say, aggressive stance toward China. Not necessarily as spectacularly as the Trump administration, but I think that this is sort of the normal outcome of China becoming, we're going to have sort of a geopolitical rivalry that is set out to increase. I think this is geopolitics, and I think this is a longer-term trend. I think that from that point of view, it is very important for Mexico to understand, obviously not only the US, but understand China better. It will have an important source of investment, but it will be of a different nature of what Chinese investment has usually been in the world. It has either been directed towards raw materials or infrastructure. And if Mexico manages to sort of read the geopolitical map correctly, this could be a very first example of diversification away from China, even of Chinese firms, into manufacturing, which is going to be something new for China. But in order to do that, you have to get an active China policy. I think that nobody in the world right now can afford not to have a China policy. And from that point of view, that is one of the things that I believe that the Mexican government should be thinking. This is not going to be changing the way I see it, in January 2021.
Wonderful, thank you. Luis or Ernesto, any thoughts on this?
Ernesto, go ahead.
My only comment, I think Sergio is spot on. I think my only comment would be in support of some of what Sergio said, but I was speaking with a lobbyist involved in international trade. This was now about a year ago, so it was before the pandemic. But one of the things that I always remember him mentioning is that with all of the complications, if you want to call it that, of relationships right now in Washington, D.C. between Republicans and Democrats and all of that, the trade with China and the attitude and the actions that the Trump administration has taken towards China is most probably one of the only, if not the only, thing where the president has bipartisan support in writing, because there's been letters from high-powered senators and representatives on both sides of the aisle where they've indicated strong support for those policies. And so, to Sergio's point, I think that will continue. There's no question, pretty much at this stage, that that will change in the near future. What the outcome of that is, of course, is difficult to predict. A lot of it is going to depend on how China reacts to some of these policies, especially as we exit from the peak of the pandemic, and how Europe and Latin American and North American countries, or the U.S. and Canada, also react toward that. So,
if I may add something that I believe is important, is that obviously, one of the concerns right now in Mexico is that at the level of the federal government, you don't have a clear policy, not only on China, but many other things. But I think that when it comes to, trade relationships, China, the US, and the like, is one of the areas in which the private sector can play a more important role. There are areas in which the government is necessary in order, for instance, to provide the necessary fiscal stimulus. But when it comes to trade, I think that we have, already a very vibrant, private sector in Mexico that is very export-oriented. And I would expect that it will be the private sector and probably governments at the regional levels, the ones that are going to be probably tapping more of these opportunities rather than the federal government, given the current political juncture.
Excellent. Thank you very much. We have another questions about for Ernesto or the Luis. How does events such as the Constellation project cancellation affect the foreign investment confidence in the region?
There's a big toll for Mexico. It is an error. Some say in politics, you don't find surprises, right? You know what's going on. That is why you wanna get into the game. So that was the federal government said it was kind of a surprise. Then it is kind of a redundant situation. Why is that? Because the people selected López Obrador to be the president, and then López Obrador says, you know what? You selected me to be the president. However, I need to ask you if you want to be or want to have this airport, this company. So that's a no-brainer. That just kill us. That is a reflection of how they think, and that is a kind of frustrating.
Yeah, I agree.
Okay, wonderful. We have one comment from Michael Wash from Hong Kong. She says that thanks everyone. I have to jump in another conference. Thank you for the invite, very insightful. Thank you to all the speakers and contributors. Looking forward to closer collaboration, etc. So he's thinking, is there anybody else that has any questions before we close our session? I mean, it's such an interesting topic that we can go on and on. We have a few more minutes. Anybody else or any final thoughts or comments from our speakers this afternoon? That somebody said that some questions directly to you. I don't know if you got any questions directly. That somebody's telling me here. Sergio, that they send questions directly to you.
Yeah, I have here about this very strong drop we are projecting for GDP in the second quarter. minus 17% contraction. That is a bit aggressive. This is essentially because when we think on a quarterly basis and based on several of the indicators I showed you, that we saw drops of around 40 to 60% in terms of the level of the variables, to such an extent that this 17% on annual basis is equivalent to a quarterly change of 40%. Again, these are the numbers that we are seeing around the world. The question with the numbers we're seeing in Mexico is that instead of a shaped recovery, because you are going to have some of the incentive and the fiscal injections, trying to ensure that the exit is going to be relatively strong. In the absence of this stimulus, instead of a V-shaped recovery, we're going to have a U-shaped recovery, where the leading factor is going to be essentially the export sector, the one that is associated to the U.S. essentially because we expect the U.S. to faster from the recession. And the other ones have to do with some of the questions we already had. Those are the ones I had in private, I think.
Okay, very, very good, Sergio. There's another lady that would like to invite you to write a special document, a report in her magazine, the Angelina News. So I'll forward the information to see if you'd like to write something for that magazine as well. And so we would like to thank you all very much for your wonderful information. This was just such a pleasure to have you. Speaking about the economy on Mexico, the Maquiladora sector, that's such an important region for our chamber here in California. And we sincerely thank you the opportunity to be here. Oh, there's one more question, and before we close, I'm sorry, I just got this one. What's the scenario looking in Mexico? This scenario looks in Mexico like the 1980s. Somebody's making a comment.
Yeah.
Oh yes, thank you very much, Ulises, for that. So we thank you all very much for your participation. We sincerely appreciate Sergio. I know it's late for you in Mexico City. And we invite to join us to our next webinars. We'll have many more coming up. We'll keep you posted, and we appreciate for your time. So have a wonderful evening.
Thank you, everyone.
Thank you, everyone. Thank you.
Bye.
Bye-bye. Thank you. Bye. Thank you, Mauricio. Thank you, everyone. Mark Levinson. Bye-bye. Bye-bye.
El concurso terminó.